What's up? What's up, everybody? Welcome aboard. It is, I guess, the Bubba Show, we'll call it. Trading with Bubba, and of course, markets are pretty wild today. We have a pretty big week. You've got this is the triple witching expiration, and if you don't know what triple witching expiration is, well, it's really nothing anymore. But back in my floor days, it used to mean that futures, currencies, bonds, and equities all expire at the same time on a Friday. And over the years, they've learned how to cut down some of that volatility by spreading out the expirations. In fact, the bonds have already gone, and a couple of others have already expired. All that's waiting now is the currencies and the options, but it still does create more volume. This is where a lot of the firms do what they call baskets and things like that, and they're working out. So what you're going to see is higher volume in today's market. The next 4 days, today and through Friday, will be higher volume, and it doesn't necessarily mean anything. I think that what you'll see is this may be the determining week as to what markets are going to do going forward. Okay, you've got a ton of news this week. You've got CPI tomorrow. You've got PPI and retail sales on Thursday. You've got an SPY ex-dividend this week, plus a whole bunch of other things, China news. So you could have, this could be the period in time that we're waiting for the markets to finally break out of this ridiculous consolidation pattern that's been in forever. And of course, consolidation sucks for everybody. It just doesn't give you real great opportunities when you're trading. But as we look, you can see that the S&P got up to a first resistance and is failing right now. The NASDAQ is breaking out and coming back down to a little bit of support. The Russell is right on support. And of course, the Dow is up in the middle between resistance and support. But the bottom line is they're still all really just stuck in these ranges. Hold on 1 second for me, guys. I just got to do one thing real quick. Hold on 1 second. So we just have to make sure. One of the things you want to make sure as a trader, as an investor, is that you're prepared for what's next. You're following the overall price action of the market. Okay, the price action is the charts. It's what we would call the map. This is a map. This is a road map. It is giving you hints or clues on a regular basis. And again, I'm not a big fan of this pattern, but this pattern, what you're looking at right here, is here's what I call a shoulder. Here's the head, and here's the shoulder. So you have the left shoulder, head, left shoulder, head, right shoulder, and this would be considered what they call the neckline. If the Russell goes below the neckline, okay, it's considered to be very bearish, and it should sell off pretty heavily. Okay. Now again, I'm not a big fan of the pattern. For me, it takes too long to develop. I don't like things that take, I like to be able to trade bang, bang, bang in 3-4 minutes, right? I want to see, boom, what I'm going to do. And it's interesting enough, as we take a look here, as I've done with you the past couple of times, it looks like there might be a potential trade here. And there is a trade potentially in the Dow. So hell, we'll see if we can make a trade. We need for this 1 minute bar here to be red. And once it turns red, we'll go ahead and make a trade here, and see how we can do in the futures market. Again, I do use the futures more actively, and it appears as we're looking at these charts here, there may be a little news, some other kind of economic news hitting the markets right now. As you're watching the euro currency go straight up, you're watching, crude is continuing to go higher, So, but again, we're going to watch this Dow because that is actually a trade based on some of the rules that I trade off and that I go by. And then if you happen to be involved in grain markets, in what time is it? In an hour, there's going to be what they call the WASD report, which should bring in some pretty big movement in the grains. Okay, I'm not saying it will, but it certainly should. It is prepped to do so. So certainly, if you're watching it, it's a good watch either way. And go ahead and if you're with me, I'm going to go ahead and sell the Dow future, and I got to put a stop in, and my stop is going to be above the high. So my stop is going to be at 35,039. Okay. And I'm going to go ahead and let that trade as we continue to talk and chat. So again, what we do know is we know this week is going to be very active, okay, or can be very active. But one of the concerns you want to have here is that with the markets being relatively thin in general, you're going to see moves that might be bigger than you would think based on what's going on, because there's really no paper in between. And when I talk about paper, before everything was computerized and electronic, okay, markets had market makers like me. I was a market maker. We would make markets, and we would, we would be compelled to make markets on both sides, buy or sell. We have to give a bid and an offer. And when it's electronic, there's sometimes a lot less paper. So if a big order would come in today, it could drive the markets a lot further than you might think, because there's nothing to stop it in the way. There's no market maker stopping it. Although the market makers are now computerized, they can certainly back out of the way and pull their offers or pull their bids if the markets are making a big move. So it's always something to understand and recognize in markets, and that's why the trading today is very dangerous if you're not proficient, because things can happen, and if you're not sure how you're going to react to them, then you're probably better off sitting it out and waiting. And this is, of course, we're talking about the futures market, which we're trading now, which I'm showing you here, because that's the only that's really active. I trade a lot of options, but I don't day trade options because I can't afford, nor do I want to give up the edge on the bid offer spread. Okay. Futures are one tick wide. I mean, if you look at a market, you can see here's a price setter. They're one tick wide. They're always going to be about one tick wide. So I don't have to. Oh, I forgot to share my screen before I do that, and then I'll show you. Here's a price setter. Here, see, this is a price. So this is what I'm trading off of, and these are one tick wide. Versus the bid offer spread in the option market can be anything. Okay, and I can't afford to give up, because remember, when you're trading, okay, you are either buying the offer if you're buying, or you're selling the bid. As a retail trader, which we all are, we do not get the benefit of buying the bid or selling the ask. We are doing the exact opposite. So we are giving up the edge on every single trade that we make. Okay, now there's nothing wrong with that, because of course, the commissions are so inexpensive now. This isn't 30 years ago. Now a Tradier brokerage at $10 a month flat for commissions. Okay, I don't have to worry about being so tight on bid offer spreads, but it's still hard to overcome. Like if you're giving up on every trade $30 on the bid offer spread, it doesn't sound like a lot, but over 100 trades, that's $3,000. Okay, versus on the futures market, I'm giving up $5. Okay, so I'm giving up $500 over the same 100 trades. Plus the fact that I can get better leverage. I don't have day trading requirements, so it allows me to be a lot more flexible depending on what I'm doing. So we do have a little bit of a profit in our trade now, about $140. Okay, and pretty soon, if it gives me a little bit more leeway, if this comes down a little bit, hold on, here. If this comes down a little bit further, I'm going to go ahead and move my stop and make sure that I lock in a little bit of a profit, but I'm going to try to let it run as well if I can. Okay, that's always one thing I try to do here, is once I start getting profits, I start managing the trade. Like if this fails here, which is when I'll move my stop down, I'd be looking for the next level for it to come down to would be here. Okay. And again, that's the next adjustment I would make on my stop would be there if that be the case. Okay. And these are things that you learn from the trading model. Okay. And by learning to watch these footprints, you can see The NASDAQ, this is the NASDAQ future, is potentially becoming a buy. The euro currency is becoming potentially a sell. And again, these are what we're doing here. We're making what we call mean reversion trades. Okay. Markets are very mathematical. Okay. And they go in when they extend either too far up or too far down. Okay. We want to go the opposite way, because we assume that there'll be some mean reversion. Now, it's not just that simple. It has a lot to do with the speed of the market, how fast it's moving in that direction. But if you get a quick jump up or a quick sell up down, you want to look at potentially a mean reversion trade, because you'll find yourself that more often than not, you will get some of that and you'll make some money there. And that's actually what we do every single morning when I'm together with members, is we're making that mean reversion trade if we can. This morning we had 5 trades. None of them are great. They're all, we call them all break evens or Bubba burger trades, okay, where we made a little bit, but we did make money. And we've actually only had 2 losing days since June. But again, they haven't been great days because the markets themselves have been a challenge. Now you can see this came right down to where I thought, and because I was talking, I didn't get a chance to move my stop. Now I'm still profitable, but I can't move my stop now because it's like getting out of the trader. So I'm going to wait for a minute and let it continue to trade. Now the NASDAQ was very close if I were going to look at a trade here, but I would have liked to see the volume up here. Okay, so I didn't do anything. But I think what you want to remember now, again, is don't try to trade the news. Understand and know, like tomorrow's CPI, okay? A lot of this price action is going to be for what they are expecting. It is called market expectations, okay? And the big firms, the big banks, they already have an idea of what these numbers are going to be. So they're positioning themselves today, and typically others try to jump on board as they can see the action coming. And typically the markets will get too far in one direction before the news comes out. Okay. And then almost no matter what the news is, the market's going to go the opposite way, because they're already over assuming or overpricing in what is expected. Okay. I know it sounds a little bit confusing, and we'll continue to work on some of these little things as we talk. And if you have questions, you can always feel free to ask me questions in here, or you can email me anytime at bubba@bubbatrading.com, because again, it's part of the deal here with traders education. Because I tell you one thing, I've been trading for 44 years. I've probably made over 1 billion trades. Okay. I used to trade on the trading floor 20 to 50,000 contracts a day. Okay. So I probably traded over 1 billion in my career, but I'm still trying to learn, right? There's always something to learn when you're trading in the derivatives market, because whatever we look at, and if we remember this motto, okay, that all charts are the same, all patterns repeat themselves, and the shortest time frame always has to give you the best general idea of what the market's going to do, because that's where it's going to start. Every market starts, you can use whatever you want, but 1 minute the Russell's in a downtrend. Okay. 1 minute we're in a downtrend. Okay. And we're consolidating right now. We're going to make a decision. Are they going to try to break back to the upside, or are they going to resume lower? Okay. If I go to a 15 minute, well, got more flat, had a spike higher, and the spike higher, and this would have been the perfect mean reversion trade. Spiked straight up on heavy volume, came right back down. Okay. And of course, if I go out to an hour, what do you got? You got a market that's basically just stuck in congestion, going nowhere. Okay. And again, just going out further, and you continue to go, you'll see how things change. And this shows me that it is consolidating, but it's in an overall longer term downtrend. Okay. And that's, again, the things that you're watching and looking for, okay? Because really, what are these? These are clues, okay? These are clues that you can use, okay? And that's something that I want you to be aware of, because this is the markets here are leaving a footprint. Okay, and you know, in all companies and all businesses, everybody uses charting for something, right? The retail industry charts to when they have to buy extra goods, so they know year over year what their numbers are, so they know what they're going to order and when they're going to order, and they use past information to project future. Well, we're doing the same thing here. We're using the past, okay, to predict or try to figure out what the future is going to bring us, okay? And I think that is something that you want to remember, okay, in a viewpoint that you can certainly put yourself in the best position. So when we watch these charts, which we do all when we're together, okay, and of course my Dow trade that I'm in with you guys here is still pretty much flat, kind of going lower. Again, I'm still not at a point. I need it to come down to here before I'm going to move my stop, but we'll see if that does indeed happen. But overall, the markets are giving us a footprint here, and they're giving us an idea of what they are trying to do potentially next, okay? And certainly if I look at the Dow, okay, I can see that it's made higher highs and higher lows as it's gone up, and now it's kind of flattened out. So now the whole key is going to come, if it goes up to here, what does it do here? Or if it comes down to here, what does it do here? In the meantime, it's in a very tight little range. And there's not much for me to do other than I'm already in a position which is virtually flat. I mean, I could make $20 right now, okay? But I'm not taking the 20. I'm greedy. I want more, okay? But when we watch this, and of course, then we tie in options, okay? And, you know, if I look at options, I can see that volatility is very low right now, okay, which means options are inexpensive. They're never cheap. Remember one thing about the option market, okay? You'll hear on TV a lot, we'll buy some cheap options. There is no such thing as a cheap option. Options are always, where's my thing? Oh, there we go. Options are always fairly priced, except when they're expensive. Remember, on the other side of your trade is a market maker. That market maker is making what they call a fair market. That market is based on order flow, okay? So they're never going to be cheap, okay? But they do tend to get expensive, you know, during very volatile times. And with the VIX right now at virtually, 12 or 13, whatever it is, okay? Virtually there's no volatility. Oops, wrong market. Hold on one second. I got to go back to a different chart. I got to put that back where that belongs. Now I got to go back to this chart and show you the VIX here. Okay, and the VIX is pretty sucky, which means that there's an overwhelming amount of complacency in the market right now. That, you know, there's not much really going on, which means that when you look at the volatility, 12%, very low. Now, again, if you know what you're trying to do and you want to do something over time, and our assumption here would be to sell short-term premium, okay, at low volatility, and buy longer-term premium at low volatility, but knowing that we could sell premium every week, or in the S&P's case or the SPY's case every day, to continue to reduce the debit and continue to reduce our costs and our expense. Okay, so that's one of the ways to use and use low volatility to your benefit, because we all know that at some point volatility is going to have an expansion, and when volatility expands, it's good to be long volatility. It's always tougher to be short volatility, because you know you can sit there, and then if it explodes, you know, remember that volatility, the implied volatility, determines price of the option. Okay, so if we're looking at the money call in the SPY, okay, at a 12% volatility, that option is trading at $1.78. If volatility would go to 25%, which has happened before, that same option without any movement in the stock would be trading at $3.60. Okay, why am I not showing you the chart? That's what I should be doing. There's what you want to see. Okay, you can see 12, a little bit over 12% volatility, option trading at $1.80. If this goes to 25, this goes to 360 without any movement in the stock. Okay. So that's something that you have to recognize, okay, because as you will notice, and as we get ready to go into earnings season, which is just around the corner, you're going to start to see some crazy numbers here in Netflix. Like right now, Netflix true volatility is about 30%. Okay. But I know that earnings are going to be out the week of October 23rd, okay, or October 27th. And how do I know that? Because I can see the dramatic jump in volatility. So I went to my chart and I go, when are earnings? Oh, they're October the 17th, okay, which takes us back into that expiration week, okay. And again, you can see the higher expansion in volatility, which then shows you that there are things that you can do and issues to deal with, okay. And that is something that we want to always be prepared for, okay, as a way to look at the market, okay. And again, we've got let's see, I'm sure Apple's coming out in the next short period of time, so we can discern when Apple's going to be Apple, and volatility jumps not for a while, so it's hard to say right now. Obviously, volatility is high in Apple today because there's a new product coming out. Let's go to Meta, not Facebook, but Meta. Meta's earnings are going to be somewhere in around the week of the 27th as well, right? Just after Netflix, and sure enough, there it is. Okay. So again, these are things when you start to look at the chart, you start to look at the markets, you can start to recognize that there is information that's going to come out, that's going to have an effect or a potential effect on the market. And I think that's an important fact for all of you to understand, that you can see it coming, so you want to trade appropriately during those times, knowing that the better trade is probably to sell the short-term volatility or the spike in volatility and buy volatility out in time. Because if the expectation of movement, and that's what we talk about options, there is an expectation of movement, right? So I know that, for example, Meta, I know that for next week is expecting a move of $14 plus or minus. The week after, $20 plus or minus. Now, if that expected move does not come to fruition, all of the options are going to lose air or lose premium, because they're pricing in X, and if they don't get that kind of move, then they're going to bring down the overall amount of volatility. And I think that's very important to understand. In the meantime, I'm going to step out here for a quick break. I'll be right back after this short break. Sorry, guys, very busy. Lots of stuff going on here today. Anyways, so as we go back and look, so we know how to recognize announcements that may be showing up. And again, it doesn't matter what stock you look at. If something's happening in any stock, it's going to show up in volatility. Okay. You know, you can see GameStop, there's nothing, it's pretty stable across. So probably not much going on. Google, okay, 25, and it jumps up into the 30s in that same time period, you know, around Apple, because I happen to know that the earnings are going to be around the same time. But that, again, if there's going to be an announcement, something that will have an effect on the stock, it's going to show up in the volatility first. Okay. And that's something that I want you to recognize. Hold on a second. Hold on one second. Sorry, I got issues to deal with. It's always fun when you get a busy day when I'm trying to teach. Okay. So anyways, we have to look at markets and recognize when there might be information. And this is also for like FDA announcements, things like that. You know, again, anytime there's going to be something to have an effect on a market, okay, it's going to show, if it has options, and they're liquid options, it's going to show up in volatility. Okay. That's without question, because the market makers are going to be pricing it ahead of time. Okay. So anytime you see something interesting happening, know that there's a potential that something's going to happen, and the markets are telling you that. Okay. It's really, I don't want to say it's that simple, but it's that simple. In the meantime, let's go back and look at our trade, which is losing a little bit of money at the moment. Let's see what we're doing here. Boom. And so it is, see, it did break out over that top level. Okay. And I'm still in the trade because I have my stop placed properly. But basically, if it continues up from here, I'm probably going to get stopped out. It'll probably be a losing trade. Okay. But the one thing I do not do is I do not adjust my trades and the stop. Either I'm willing to take initially the full loss that I assigned to it to begin with. Okay. So that's the loss I'm willing to take no matter what. I am not adjusting to take less of a loss. The first adjustment I'm going to come is when I can get to break even. Okay. And so again, right now this is against me, but it's right now it's not that big a deal. I'm down about 23, which is about $100. So, but we'll see. We're going to continue to watch it, and we're going to continue to watch the rest. And here, this was a potential opportunity in the euro currency. Let's just see what it looks like. And sure enough, it was a potential trade. So what the heck? Let's make another trade while we're hanging out together, having a good time. Let's make another trade, because these are trades I would make anyways. Okay, if I was watching without you. So as long as you're here, you might as well watch and trade with me as they do in the mornings with me. In the meantime, this looks like it could get a little ugly. But again, I don't worry about any individual trade, because trading is a sum total of all the trades that you make. If I worried about every individual trade, I'd have a nervous breakdown and I'd have gray hair. Oh, I do have gray hair because I'm old. So, but you have to, again, focus on the bigger picture. Okay. And the bigger picture is, how am I going to make money? Where am I going to make money? What am I using to get in? And what am I using to get out? And the more important part is easy to get in. The hard part for most is to get out. Okay. And we have to make sure that the minute we get in a trade, whether we're using a trade like in my options trades that I use, they have built-in stops in them already. I don't have to have stops because I don't put myself in open-ended exposure. But my futures trades, I have to establish a stop, and I'm using a mathematical equation to create that stop where it should be. And more often than not, it'll allow me to stay in the market. But right now, it does not look like it's going to let me stay in. It looks like it's going to fire me out here. Okay, let me show you where we're at. Okay, it looks like it's going to pop me out. Now, again, I still have time. Again, I found a good level, and I'm able to survive this. And all I need this thing is to do is to turn over, and then I will not get stopped out. But right now, there's danger of getting stopped out. Okay, but we'll see. We'll see what happens. And of course, the euro currency is right now about break even where we got in, but it's right here up at the upper level. So we'll see what happens with this as well. And again, we'll see. The market is again, as I mentioned earlier. Here, look at here's the S&P going parabolically higher. Now it's only on a 1 minute chart, but still going straight up. So you can assume that if you can find a good entry, and I'm not looking for any more entries now, but if you can find a good entry, okay, then you're probably going to get some mean reversion and some pullback, okay, and that's something that we want to always focus on. Again, the whole trading world, your whole environment is based on you putting probability in your favor, okay. Sorry, a nice group of talk. Is putting probability in your favor. That's what we do. Now, again, if you're a game player like poker or bridge or backgammon or gin, you can have the highest probability and still get beat. But that's why we don't worry about one trade. We're worried about getting ourselves in the highest probability position on every trade, okay? Knowing that, again, the law of large numbers will play in our favor, okay? And that's really what you're playing. It's the old story, a coin flip, right? If you flip a coin, what are the true odds of a coin flip? Well, the answer is 50-50. Well, what if it comes up 50 heads in a row? What is the true odds on the next flip? It's still 50-50. Okay. The probabilities don't change because you're looking at a model that's billions of numbers that come into a sequence, because in any given run, things can happen. Okay, so what you're trying to do is to make sure that you're putting yourself, again, high probability allows you high success, okay, allows you to overcome the losing streaks, which you're going to have. I mean, there is no way that you don't get losing streaks in this business, okay? They're called drawdowns, okay? Now, if you know what you're doing, drawdowns work out to be an opportunity to help you, okay, to make more money off of. But again, you have to remember that you're going to go through losing streaks. You're going to lose money sometimes. And again, not everybody has the fortitude to suffer through some bad trades, because, just because I tell you that I can hit 66% doesn't mean that I can't go 0 for 10. Okay. And again, these are things to remember, okay, as a trader, as an investor, okay, that drawdowns are a part of the business. Okay. And the worst market for traders, okay, is when the markets are doing exactly what they're doing right now, which is nothing. They're sitting in consolidation, which is a pain in the ass. Okay. They're going absolutely nowhere. So what do you do? Okay. And that's always the hardest decision to make, is what do you do when the market is like this? Okay. Well, you either pass and walk away, or you try to trade it in a very disciplined and patient way. Okay. My advice to anybody and always is to walk away. And to me, sometimes markets aren't worth trading. Okay. And certainly, if I wasn't here right now, I'd probably be on the golf course. Okay. Or I'd be out by the pool. Okay. I wouldn't be watching this, because I can see the challenge behind it, and knowing the news that's out there and the other things that are going on, it probably makes more sense to wait until there's more activity. Because again, I don't need to trade every minute of every day. Okay. I think too many of you put yourself in a position that you think that you have to be always trading the market, when, quite frankly, there are many times it's better not to trade the market. It's better to be on the sidelines. There's a lot to be said for learning how to observe what's going on and finding those better opportunities. Okay. And that, I think, is something that, you and everybody out there should learn, is that sometimes it's better just to watch. Was it a Yogi Berra quote? I can't remember exactly what it was, but you can observe a lot by watching, whatever he said, one of his yogiisms, but it's there's times when it's better and more educational to you that will give you a higher probability of success if you wait. Okay. And that's, again, one of the things we want to focus on all the time is not, we don't have to be in, we can watch the market without trading it, looking for the key spots that will show up. Okay. In a chart. Now, again, right now, if I were going to do anything here, I'd be a seller. Now, I'm not telling you to be a seller. I'm just saying that if I were going to do anything here, that's the only trade I could make right now. And interesting enough, Tesla, which I did not get a trade off on this, but I wanted to, but I was busy. But I said last night on my call, if this got up to almost 280, I would short it. Well, look where it got to. The high of the morning was 278.50. Okay. Well, that would have been a spot that I would have taken a chance and it would have worked out. Now, I'm not telling you should, and I never talk about trades or tell you what you should have done unless I've actually made the trade. But I did mention that last night. Again, I just got busy and didn't have time to look at it. All right. But I will tell you there's a trade open right now that I'm watching for a potential opportunity to buy in, and that is Oracle. Now, I'm going to miss this too. Yeah, of course I missed it. Okay. Now, again, I don't know if it would have been a trade or not, but I do have a current position in Oracle, okay, which I did benefit from, but I would have thought of getting long down here off of an earnings announcement that tanked the stock, created heavy volume, the same as we use on our other trades on this time frame. I just wasn't able to do it. I do have a current position, and I did roll down my long puts that I own here to take profit out while still staying in them. But again, these are things that I'm watching for in markets when they make moves that are big and out of character, okay, for what they're supposed to do, because that's where you will find opportunity. And opportunity will always come to you, if you're prepared for it. And then the next step you need to know is, okay, so if I see this action happen either here or in Tesla, which either trade, they're opposite, one's long, one's short, what am I going to do? What is the trade that I'm going to make? Am I going to buy or sell the stock straight? Well, to me, I don't like that kind of risk, okay? So I'm not going to do that. Am I going to buy a call straight or buy a put straight? Well, I don't like that strategy either because I'm paying too much error, too much premium, okay? Am I going to sell a call naked or sell a put naked? Never. I don't do that ever, okay? I don't need the exposure and the risk. So I'm down to either creating some sort of a risk reversal, which has exposure to time decay, but not to over movement. Or I could maybe look at selling a call spread or a put spread, which is usually the trade I will go to first. So if I were looking at a stock like a Tesla, okay, and I said, okay, well, I want to get short Tesla right now, and I want to get shorted in what I would think the safest way, I could just sell a deep in the money call spread, okay? So basically, let's say I'll sell the 260, 285. Okay, so I'm selling, let's say that spread for a credit of $12.48. Okay, I've got a $25 risk, so I've got a $1,300 or $1,200 risk, whatever. Okay, now why is this better than just buying the straight 285 put, which is really what I'm creating here? I'm paying $1.30 less per trade. And what am I giving up to get that $1.30 less? Well, in this case, I'm giving up the potential for unlimited potential downside, but I don't expect that to happen. And I can always readjust later. But for now, I can get in and save some money. And believe it or not, if I go out to, let's say I take this out to the same trade to October 20th, whose expiration, okay, I've still got the same risk, okay? But if I look at the October 20 285 put, that's trading at $25. So I'm paying half for that same trade to go out that far. Okay. So again, you have to analyze and look at these trades as you would for yourself. That's again what you're trying to do here. Okay, with trading, you're trying to create and put yourself in the best possible position. Okay, to be successful for no other reason then you want the highest amount of probability in your favor. Okay, that is really what it comes down to. Again, we go back to, you'll hear this a lot, the probability model. Okay, so I have to look at trades and understand that I can make a lot of different combinations. I mean, a great trade that a lot of people can make, but again, of course, you have to have a lot of capital to do this, but is to, buy a call and short the stock, because you pay much less premium and you have a much bigger exposure to the downside should the market collapse. Okay. And again, so understanding and learning different options, different derivative trades that you can make. Okay. Because there is every day, there's a ton of arbitraging going on in the markets. There's a ton of options versus futures being traded. There's a lot of things happening, okay, at any given time. And if you're recognizing what's going on and you're recognizing how the order flow is working and how the things are going, then what you're really doing is you're preparing yourself to be successful. You're preparing yourself to put yourself in a position, okay? You can't force the market to do what you want it to do. The market's going to do what it wants to do because the market is always right. So all you can do is to, again, create a probability model that puts you in the best position. And it is by creating different types of derivative trades. And you can use combinations of different options. There's an unlimited amount of combinations that you can make, okay? Because what you're doing is you're using a creation, and all you need to establish on any trade is, if I'm doing some sort of a spread, then I know what my risk is exactly. If I go back to this Tesla trade, okay, I know my risk exactly is $1,300 per contract. Okay, that's my risk. It can't be more. It's $1,300. That's it. Okay. Now I can adjust that later, but you have to know what your exposure is on any given trade. And if you can't establish it, if your exposure comes to be unlimited, it's probably not a trade you want to make. Okay. These are little things that nobody teaches you, but I'm going to teach them to you because I think it's important that you understand, again, what am I exposing myself to? If I can put this trade on for a $13 risk, don't you think that's a better trade than putting it on this way for a $25 risk? Which way do you think is better? I'd rather take the $13 risk, knowing that I can continue to adjust around this trade and I'm at no risk to time decay, versus if I buy this $25 put, I've got a ton of time that I'm risking. Okay. Every day that goes by, the stock doesn't move in my favor. I'm giving it not only the way it moved, but I'm also giving up time value. Okay. So again, I warn you, and I hope to teach you to look for the best way to set up a trade based on the way you see the market. Okay. Because we might see it differently, which is fine. But the one thing I can promise you not to do is keep your opinion out, because our opinions, and I'll include mine, are worthless. Okay. Because they have nothing to do with what the market's going to do right now. They have nothing to do with what the tape is going to do right now. If you look, and again, if we go back to, if you remember the story of the BRICS nations that want to bring out their own currency. Well, if you think about that, would you not think that if the BRICS nations were going to be successful, would you not think that the dollar would be lower? But no, the dollar keeps going higher. Okay. Would you not think that gold would be higher? Oh, well, wait a second. Why is gold lower? Okay. If they're going to open up a currency that's going to have an adverse effect to the dollar, and they're using gold as a backing, shouldn't gold be going up and the dollar going down? Well, that's not what's happening. So the markets are telling you that is incorrect for right now. Now, does it mean it's never going to be right? No, it doesn't mean. All it means is that for today and for the past few weeks, since all this news came out, the markets already know what's going on. It's already priced in, and there's nothing else to talk about. Okay. And that's what you want to remember. And since I covered so much today, we're going to call it a day. Ruben, thanks so much. I appreciate it. Everybody have a great day. Appreciate you. And we'll see you back here on Thursday. Same time, same station. Bubba's Show.